mode.
And we're live. Welcome everyone to the Legal Hour with Marty Tate. I'm your host, Brent Bragg from CrowdEngine. We have the luxury today with talking with Marty Tate, and I want to welcome everyone. We also want to welcome each of you, our listeners. Different than many webinars, you, our listeners, are actually active participants in today's webinar, where you'll have the opportunity to ask your questions to Marty, what the actually industry chatter and what questions you may have about different legal questions you have regarding your different raises, different portal questions you may have, whether it's with different regulation types or other things you may have as far as the setup of a given portal or issue you may be facing. Marty, why don't you go ahead and introduce yourself? I know Marty's been a top legal securities lawyer for the past 17 years and is currently, what firm are you currently at?
Brent and I practiced this multiple times before, but apparently he just punted. So I'm a partner with Carmen Lenhoff Israelson. We're a local, I guess, regional boutique corporate securities, finance, and transactional law firm. But I've been doing securities laws for about 17 years, specialize in public and private finance and crowdfunding.
Great. So first off, there's been a little bit of shakeup in the couple of interesting things in this past couple of weeks. Outside of the election, the SEC chair stepped down this week, which gives a little bit of excitement in the fact that the SEC's really been focused on cleaning up the industry. I think most observers have noted. And now with the new administration, there's a little bit of chatter that the new appointments might have a little bit more focus on entrepreneurship and a little bit more fintech friendly. So we'll be excited to see the direction the new administration takes that. And so we'll all be looking for those new direction there, whether it's going to be more of the same or an actual new direction. And then Marty, why don't you tell us about the announcements that happened on October 26th with the election? I think a lot of it got swept under the rug for people outside the industry. But for those of us in the industry, the changes of the guidelines that were made to the regulations.
Yeah, so I'll actually comment on your first thing first. I think it's having the commissioner of the SEC step down. I think it'll be interesting. I know there's a lot of excitement about it. There was a lot of those in the industry felt that the SEC dragged their feet a little bit. They weren't as entrepreneur or company friendly, issuer friendly as many had hoped. I don't know, but I think that Commissioner White, I think that she did a good job, and I think it'll be it'll be interesting to see what changes happen. On the second issue that you brought up regarding on October 26th, the final rules came out for the amendment to Rule 147. And what this was is, I think it's a really good thing. This was actually, they said they were going to do this a year ago when they issued, there was sort of a sub note when they issued the final rules for regulation for Reg CF. But what 147 is it basically, it works in conjunction with Reg D 504, and it's a safe harbor for, it's basically a federal exemption safe harbor for intrastate offerings. However, a lot of people, with crowdfunding, there was a lot of just incongruencies, I guess you could say, because of the way that intrastate crowdfunding would work. Basically, a little background on that. In 2014, there was a CID written that was a compliance and disclosure interpretation provided by the SEC that basically said, hey, if you're going to do an intrastate offering, and at the time there was like 12 states that had passed intrastate crowdfunding exemptions, they basically said that's fine, but in order to comply with Rule 147, that offering has to take, you can't offer that. That offering has to be wholly contained within the state, which, as you can imagine, anybody doing any sort of offering with the internet, that became challenging. And I know that people tried to work around it by basically saying, having people qualify, for example, in Texas. I'm a Texas resident. You couldn't see anything unless you verified that. But again, it basically made it really difficult for intrastate crowdfunding people to do intrastate crowdfunding offerings using the internet. So 147, essentially, the big thing it did, in addition to increasing what you can do under Rule 504 to 5 million, it also, the big deal is that it basically said, hey, we're okay if you do an intrastate offering using the internet. We're okay if people see it. You just have to make sure that you limit the actual investors to investors within that state. So if you're in Texas or one of the other 35 states that has an intrastate exemption, you can do an intrastate crowdfunding offering, and it will comply with the new Rule 147 or 147A, even if anybody can see it on the internet. So that was a big change. And one thing just to keep in mind with that, Brent, is that even under 147, you still have to comply with each state's requirements. And so, that's why it was sort of met with a hooray, yeah, and not a big deal, because each state has their own requirements. And now with Regulation CF, with 506C offerings, with these federal crowdfunding exemptions, it's almost easier just to go the federal route and not limit yourself to one state. But
so as much ado about nothing?
I don't know if it's much ado about nothing. I think there would be circumstances where you could say, hey, we're going to offer this to a state. And I think even smaller offerings, if you're really just going to try to generate, if it's a local business or something, the Richard Schwartz, the local pizzeria example that wants to raise money, they might want to do that under an intrastate exemption, because maybe the limitations on investor limits might be less, or not as onerous as a Reg CF offering. But I don't think it's much. I think that your securities lawyer can kind of counsel you on that and what would be best. But sure, it gives another arrow in the quiver, I guess.
Sure. We have David asks, would it be possible to list an intrastate and a Title III offerings on the same portal at the same time? Of course, using the CrowdEngine technology.
Of course. Let me think about that. It really will depend upon the state that you're in. The Reg CF, one of the things that I think it's tricky. I'm just trying to do this sort of mental mashup of that, because what you would be doing is you're using this sort of general solicitation to get everybody. I suppose you could have some sort of bifurcation of the landing page where you say, I'm a Texas resident or I'm a Minnesota resident, and that would take you to offering materials that were strictly compliant with that intrastate offering, and then for everybody else they could be sent the other way. But I think that really blurs alliance there because the other thing is, obviously your Reg CF offering has to be done through a licensed portal.
But how would that be different than a Reg A Plus offering and a Reg CF offering?
I don't think
which we know is also possible.
What I guess I would be concerned with is your state under Rule 147. I suppose it would be okay. Again, it really is based on, it says that you can advertise to the whole world. You just have to make sure that your investors are only within that state. So how do you keep those two things straight under a Reg A Plus and a this is why I love coming here and just get put on the spot right out of the gates. Under a Reg A Plus and a simultaneous Reg A Plus and a Reg CF offering, you're not limited to within one state, right? You're able to offer to everybody. So, and the tricky thing about that is obviously your timing, because you can't test the waters on the Reg CF, and that has its own. Although you said though we've established it's possible, it still is difficult. I suppose that you could do it. You just have to navigate through both rules, both federal rules.
Configuring your project template on CrowdEngine to not accept investments outside of your state on your intrastate deal to stay compliant on those investments, and then to have your regulation CF project template to those standards potentially. Yeah. So again, may allow for it.
So let's presume you're a platform, right? So you're a licensed portal with FINRA and the SEC. I suppose you could say that certain aspects of that platform were operated by your licensed intermediary that were doing the CF offering, and then I suppose you could have that simultaneous offering there. It's just again, you'd have to it's technology combined with legal to try to make that work. I'm also thinking, what if you just did this? You had your Reg CF offering going over here, and then on your website you had, an interstate offering, kind of for a single raise, which is something I suppose you could do. Again, you just have to be really careful. Maybe there's other security lawyers around the country that are screeching their brakes, but I suppose it could be done. Just we'd have to think about the best way to do that.
Here's an interesting question coming from the film industry. Okay, what are the changes or benefits to changes in the regulations in regards to platforms that produce multiple domestic and international film projects? So let me write. What are the changes or benefits and changes at regulations in regards to platforms that produce multiple domestic or international film projects?
So let's look at a film project as not being any different than any other issuer, right?
Correct.
As long as you're, I actually had, way back at the beginning of my career, I worked with a few studios and had those as clients. And so every film has obviously its own entity. You'll form we use the term SPV a lot, special purpose vehicle, for that film. So if you're having multiple films that you're trying to fund, obviously crowdfunding could help. And whether you're trying to raise less than $1 million under Reg CF, or you're trying to raise $10 million under a 506C, or you're trying to raise, you could also raise money for a variety of films under like a Reg A offering as well. So that's how.
I think it opens the floodgates when you think about, I'm watching a trailer in a movie And right there, I could open up my smartphone and invest and go from being a fan to an investor to an ambassador. So whether I'm watching an action film or whatever my genre of film of choice is, and whoever my stars of choice are that I'm fans of, I now can participate on a much more dynamic level. Instead of just going to the movies, I can now drop, if I'm dropping $20 for a bucket of popcorn, I could then arguably drop a couple $100 and actually potentially even yield a profit from going to the movies. I think the opportunity for investors grows quite rapidly, and especially when you have the potential to profit from, when you look at all the films, you're probably not going to get your hands on Star Wars or a blockbuster like Titanic. When you talk about all the other independent movies that have a potential of getting big, I think there's a lot of opportunity for film in particular if you could land some names and or some popular titles out there in front of people.
Yeah, well, and it's really not. I mean, they're doing it already. Obviously, there's been a lot of films that have been funded through Kickstarter or Indiegogo, and so that's not a new thing. Now, what it does is instead of I like your idea too. I think would be pretty amazing to be able to say, "Hey, I saw this trailer online and invest now," and you not only can help fund the project, you can participate in the profits if it's successful. So, yeah, I think it would be, like you said, a lot of opportunities there.
So Indiegogo just announces they're in the game for equity crowdfunding, a big splash this week. What are your thoughts in general, Marty, about that?
Yeah, I think it's great. I think that I think it was a matter of time. And,
Yeah.
I know that Kickstarter is still holding strong, saying they're not going to throw their hat in the ring, but we'll see. But I think it's great. Our firm actually helped one of their first offerees prepare their documents, and so we were excited to be involved with that. They, filed on in connection with Indiegogo going live. So Republic Restoratives, it's a distillery in Washington D.C. So
From the concept of all the boats will rise with the tide in the bay or type of thing, or in the harbor, then yeah, I think it's great for the industry. It's bringing a lot of attention, and it's bringing awareness to our industry, which I think is phenomenal. And so I think all news is good news. And so from that aspect, whether Indiegogo has any magic, pixie dust in their back pocket, no.
yeah,
But as far as, are they doing anything special? Probably not.
No.
But as far as their ability to have a lot of horsepower behind them, sure, I think they have a great marketing engine. And so I do think they'll do a lot of good as far as that. But I think everyone who's looking to jump in the game, I think they're going to bring a lot of awareness. And I think a lot of boats will rise with the tide because of Indiegogo. So I think it's great from that aspect.
Yeah, and I think that it's, again, like you said, they're not doing anything that's that overly unique. Other than I think it's what's really cool is you have this sort of donation perks based, rewards based crowdfunding that's happening right alongside equity crowdfunding, which I think that's great. So I think what I hope is, like you said, that all boats will rise. I think I'm working with a number of different platforms that are working through the process now, and they're really specialized. So it's not just, hey, let's go and invest. It's not what you're going to find on WeFunder or StartEngine. These are companies, for example, like a revenue sharing model, or really specified companies, which I think that will be beneficial. I think one drawback to a lot of those sites is if you go and there's 100 different investment opportunities and you don't really know what you're doing, it can be overwhelming. And I think we talked about this last time. I don't think as of November 17th, people are just getting online and saying, hey, let me go see what I can invest in today. I don't think that's happening quite yet.
I think, yeah, I agree that there's a difference between investing and buying lottery tickets.
Mm-hmm.
And I think people are going to quickly learn the difference. And I think it's good for the opportunity. And, and it will be fun as both, as an industry, we educate both the investors and as portal owners and industry as we teach the world how that works, right? And there's a difference between a real estate investment and a seed investment and a series round, and how at risk your money is and what your payoff for a rewards is, right? You're getting a t-shirt and the golf balls for that $100, and then good luck with that.
Yeah.
Versus you might get $100 back.
Yeah, there's and I think there's a time and place and a space for everything. There was I'm a bike collector and love to ride. So there was this really cool. Anyway, sort of specialized bike that was being offered on one of these crowdfunding sites. And I didn't really care if I invested in the company itself, but I sure wanted one of those bikes. I wanted to be able to be the first one to get one of those bikes. So I think that there's those companies that can do pre-sales and rewards. I think there'll always be that space.
Exactly. Next question is, if a portal's not looking to do any intrastate deals, is the 147 amendment applicable at all to their portal?
No.
Perfect. So yeah, don't even have to worry about it. Unless you're doing interstate, it does not apply to you.
Yeah, it really just for those who are trying to do interstate, it just makes their life a little bit easier, really, on the technology side and the size of the offering.
So here's a kind of a great question. Seems like there's not a clarification of what expert this person's looking for, but they go, every time we go searching for an expert, the first thing that comes out of their mouth is, send us $5,000 and we'll talk. And so go, is there really an expert? Are there really any experts at this point in the industry? And so, not knowing, he didn't say whether it's an SEO expert or a legal expert or any other expert for that matter. What's your take in general on experts in the industry?
I think
it's a loaded question, obviously.
That is. I'll speak for myself that I answer calls every day, every single day, without taking $5,000 up front. Maybe I should change my model there, but no, I think that there are experts. I think that Brent's an expert in the field. I think that there are a lot of experts. You go to the crowdfunding conferences, and there's people that are experts. They've been around, both legal experts, there's technology experts, there's marketing experts. So I think there are. And I'll speak for legal experts. I know that I'm happy to consult with people. Like I said, I answer questions all day long. Brent and I have talked about this. And yeah, the ultimate goal for me is to be able to help you and provide paid legal services. But I'm happy to answer questions. And a lot of times people just want to be able to get their heads around the whole concept before they move forward, and I understand that, and I'm happy to work with them. So.
As far as my take, there are experts, and there are people that fancy themselves as experts, and it's really difficult to sometimes discern between the two. And I think the same is true on the other side. There's people that are earnestly looking to find those experts, and there's a lot of people that will waste your time. And so there's give and take on both sides of the aisle. And so there's I think it's fair for both sides to filter out both people. So I think just like this webinar is a free content for people looking for value to get it, so they could be better equipped to find experts and to be better are more aware of how to proceed in the industry so they can make better decisions. Hopefully there's content here to make yourself aware to proceed forward. I would always be cautious of writing big checks without quantifiable results. I would always go with your intuition and gut and proceed forward. And again, all the old time tests of references and referrals, and is there a trail of success behind someone or a trail of dead bodies? That's usually a good standard I typically go by. But I would definitely agree that there's a lot of great experts and successful people in this industry, but I wouldn't just take someone's word for it. Would you consider crowdfunding to sell an asset as creating? So there's another question of the cost of the paperwork, of creating the paperwork for a security. How can a small business even think about crowdfunding when the documentation required is so expensive? Now, I think we need to talk about it just because, well, it's a perception thing, right? And so let's just talk about the perception for a moment. Well, because I think it's whether it's
well, and I guess that's there probably is a perception that it's expensive, and expensive is, I guess, relative, right? It's going to be relative to the size of your business. It's going to be relative to the amount that you're raising. But that expense can also be relative to the market that you're in. If you're in New York or San Francisco, then one of those law firms is going to charge you is going to be significantly different than what you might get, from an attorney in Denver, Colorado, or Salt Lake, or one of the smaller markets. And that being said, and again, this is completely self-serving, but you're not going to. I feel that there are experts, going back to our last thing, that aren't necessarily located in the large law firms throughout the country, and I think that you can get benefit from that. But that being said, it's going to vary. I don't think it is necessarily that expensive. If you're going to try to raise $50,000, then yeah, that might be, spending, on a 506c offering, spending $5,000 might, that's 10% of the raise. But if you're trying to raise $500,000 and you're spending, $10,000, suddenly that's not a lot. So
I have another question that's going to go on top of this one, and I think it kind of, I think it's appropriate that they go together. Why is the Jobs Act off to such a slow start? And I think they fit together, and I'll answer it first, or I'll start the conversation off first. And I think they fit together in the fact that it's a capitalist society. So when you talk about the cost of whether you're calling it legal work or whether it's the cost of an accountant doing an audit report, or even the cost of the portal or anything else, because it's capital society, there are hard costs to things, but there's also competition that drives costs down, and innovation and other things. And so if being a free capital society and innovation, that will drive costs down. If there's low demand, that's going to keep costs high. I think the delay in the demand has kept costs a little high, but I think that has a lot to do with the political delay this past year. I think the election year has given the demand a little bit of a curveball that I've I've witnessed and I've had feedback from this last several months. I think a lot of people have just been in a little bit of a political funk this last few months. I don't know what you've witnessed, Marty, the last several months, as far as people just really uncomfortable with what they were going. And I think they've really been in a very pause. But I would say in general, if I was to go back the last several years, outside of the SEC and FINRA dragging their feet, I think the industry's moved very quickly. When you look at all the projections crowdfunding has was supposed to do, they've exceeded all the projections as far as how much money crowdfunding was supposed to raise. They've exceeded every single mark.
Yeah.
So when we talk about a slow start to crowdfunding, I'm saying, what slow start?
Yeah.
Right? What slow part are we talking about? And so when so I think our expectations are a little bit ahead of ourselves when we talk about slow, because I don't see slow. What I see is maybe we're spoiled because we want everything to be lightning fast because we see other industries very, very developed and mature, and we want this brand new baby industry to be as mature as these other industries that have already been around for 20, 30, 50 years, when ours is brand new and it's just not there yet.
Yeah, I would agree. I don't think so. One thing you might say was slow, that getting the regulations passed. I've been involved with this pre-Jobs Act. Was involved, very closely involved with the Jobs Act, monitored that, participated in that process, and from the time that the Jobs Act was passed to the which was in 2012, to the time where we finally got the regulations for under Reg CF, and that was there was obviously some lapse in that. I mean, you had several years pass by, so there was. I guess people could say that was slow, but I think that being said, it's been successful and it is growing. The fact that these are old numbers. This was at the end of Q1. So the first quarter after the Reg CF was passed, you had, 82 campaigns filed. You had close to $10 million in commitments. And this is for a brand new legislation, a brand new industry. To see that within that period of time. And I'm sure, I haven't seen numbers for the second quarter, but I'm sure that they would double that. So I think it's off to a good start, and I think it will continue to grow, and people will become more and more comfortable with it. One area where you've seen, anything but it being slow is in the real estate field, and with companies like Fundrise and Realty Mobile and Realty Shares. I mean, those companies that has almost become the norm for doing real estate syndications. And it's also become a norm for a lot of real estate finance. That's where people are getting their funding. That's how they're doing it now. So I think you've seen a huge market acceptance there.
Yeah, I agree that we are quick to see the remaining issues that we're kind of almost frustrated with, of why can't they just see and fix this?
Yep.
Why can't this be easier? But I think we're almost spoiled to the fact that how soon we forget how far we've come in such a short amount of time. So let's go back to some oldies but some goodies. We still get people asking, do we have to be a broker dealer to have a crowdfunding portal?
No. The answer is no. Now, broker dealers would say you need to use a broker dealer, but technically, no, you do not.
So why do broker dealers say that?
Well, obviously there's self-interest, but it is safer to use. So let me back up. The answer is a qualified no. If you are doing a 506c raise, or to an accredited investor raise. On your, you do not need to be a broker dealer to have that, to operate a platform. If that so long as you are not charging commissions. Sites such as Angels List uses, and there are other real estate platforms that simply charge a listing fee. It's not based upon the success of the raise. It's not tied to a percentage of the raise. It's just a flat fee, and or a transaction fee. Those companies are not broker dealers, and one isn't required. The other option is if you are a FINRA approved, SEC FINRA approved funding portal to do Reg CF, that's authorized to do Reg CF offerings, then you do not need to be a broker dealer, and you can charge commissions. But again, you're limited to raises of up to $1 million under Regulation CF. Why it makes sense to use a broker dealer is you are offering securities. A lot of people do use a broker dealer because that allows them to take commissions or to work with the broker dealer on compensation structures that might work better for them. The other thing is, again, you're selling securities, and having a broker dealer does provide a layer of protection because your securities are being sold through a licensed broker dealer. So it's a qualified no.
Gotcha. So one of our participants, they heard you mention Republic Restoratives, and you said you had mentioned helping the Republic Restoratives with their documents for their raise. It looks like their minimum investment goal is $50K and their maximum is $300K. My understanding is that the minimum has to be no less than half of the max goal. How did you get around that?
Yeah, that's not necessarily the case. Yeah.
Okay. So they had a misunderstanding of what the actual guideline was.
Yeah, and you're seeing this a lot with a lot of these. I know that, for example, I was speaking with someone at CrowdEngine last week about this, and that they're really going with, and it's been based upon feedback from the SEC that initially people were coming out and saying we're going to raise, and I think the comparison there is like under a typical rewards-based campaign, you say we're going to raise $250,000. If you don't raise that $250,000, then the campaign fails.
The all or nothing.
Yeah, and so a lot of that all or nothing model was kind of what people were following, but there's been feedback that you can have a much lower minimum, and so people I think you'll start to see lower minimums. Which allows the company to at least say, well, hey, we only raised $50,000, but we can at least take that versus trying to go for or receive the whole $300,000. And you're seeing a lot of people to blow by those minimums too, and try to go up to that full targeted amount. So.
Going back to the broker-dealer question, is there a difference between taking a commission and charging a flat fee?
Yes.
So what would be the difference? So is there a difference between charging a flat fee at the beginning or the end?
Yeah, so the flat fee, again, the key to that is, a commission is typically paid upon, it's tied to the success of whatever the sale. I mean, it's the equivalent of paying somebody a salary versus paying your car salesman on commission. If you pay the car salesman $30,000 a year and he doesn't make anything on the sale of a car, that's essentially your flat fee, right? But if your salesman is being compensated on the sale of a car and he gets a percentage of whatever he sells, that's a commission. If you're getting a commission, which is you only make money when the car sells, or you only get money when the offering is sold, then you need to be a broker dealer.
Gotcha. are FINRA registered CF portals limited to Title 3, or could they also do anything Title 2 or 4?
They are limited to, and you'll see actually, you'll see there are groups out there that are doing all of them, right?
Yes,
So
they're doing Title 3 and Title 2
yeah.
and Title 4.
And the way they do that is kind of tricky. But what you'll have is the model that they're going with is the platforms are owned by one company. The Reg CF offerings are being conducted by the FINRA licensed intermediary. The Reg CF or the Reg A deals are being done by a completely separate entity. They're all being done on the same platform, which I think is great. I actually, gave bad advice when this was all coming out, saying, "Oh, no, you can't do that." And but then somebody did, and now that's the model. So, which is great. So, the thing that's fun about this for me, and fun and yet frustrating, because I get called on stuff like all the time. Well, you said this, and it's an evolving area, and the evolution is happening daily. There's new things that are happening every day, and people are testing what can be done, because we're bumping up against so many boundaries and entering so many new frontiers that a lot of times the rules are made on the fly in telephone conversations that myself or my colleagues are having with the SEC, calling and saying, "Hey, we want to do this. Is that okay?" And I've actually been surprised at how willing the SEC has been to work with people. I think that goes back to the discussion about the commissioner stepping down. I've seen more creativity and flexibility out of the SEC in the past year than I've seen in my whole career. So.
Yeah, I haven't had a lot of complaints about the SEC in my short time with them the last few years. I thought they've been a reasonable agency, but again, I've had a very limited exposure to them. There's a gentleman asking if a company issuing securities for different SPVs, is a company limited to $1 million per SPV or all SPVs combined? It's a little tricky question, but I think.
So if you're trying to say, okay, I'm a parent company and I know that I'm limited to $1 million, and so I'm going to form this subsidiary and I'm going to raise $1 million there and another subsidiary, they're going to integrate those offerings. So it's limited to $1 million across all affiliated entities. Now, if you are, sort of a large holding company, and these are truly unrelated businesses with separate books, records, separate management, separate business models, separate markets, then the argument can be made they truly are. They're different companies. But if you're using the SPV model to get around the $1 million limitation, then it's not going to fly.
Great. Does a registered investment advisor qualify as an accredited investor for purposes of crowdfunding?
What was that again?
Does a registered investment advisor qualify as an accredited investor for the purposes of crowdfunding?
I would assume so, because they would meet that. The registered investment advisor is hired by an investor to go out and basically place their money or manage their money. So they're going to look through to the ultimate investor, right? I think just by virtue of being a registered investment advisor, if you're acting on behalf of another investor, that other investor is going to have to be meet the qualifications.
All right. Well, that does it for this month's Legal Hour with Marty Tate. We'd like to thank everyone for their participation, and we hope you had a great day. Thank you.
Yeah, thanks, Brent.